In this video, trader is going to examine the question, I don't need to learn to trade, I can just follow or copy a profitable trader. Makes sense? Stay tuned. Hey traders, warm welcome to your right. So this is a pretty sensible question that has come up many times before, and it's one that deserves some attention, to be honest, because there's a very valid point of this is that, well, why do I need to learn to trade when I can just follow or copy a profitable trader, right? We all know there's plenty of systems, signals, etc. out there that we can follow, we can copy, the track record's good, or well, if we just copy those and follow those correctly, then we're going to do the same as them, right? And that makes perfect sense. Now, this is a little bit different from placing money into a fund. You take your money, you give it to them, you get a quarterly report. You're not dabbling and meddling with it, you're just letting them manage it. So put that to one side for now and just focus on someone literally spoon feeding you the trades and saying, hey, I'm buying this here, I'm selling this here, here's my stop, here's my limit. Now, in theory, if you're doing that and it's a profitable trader who's doing well in the current conditions, he or she is really good, producing the results, you're going to get the same results. If you follow every single trade, you're going to get the same results. And herein lies the first problem, guys, is that you won't follow every single trade. And even if you do, there's something else which we'll come to in a second, but sometimes it's one or two trades that make the difference between an up month and a down month, or an up week and a down week. And if in the case of a swing trader, maybe even a year. You go back and you listen to some of the great traders of our time and they talk about some of the systems they were trading, and they say, hey, you know what, we tried to dabble with the system, we didn't take one or two of the trades, and that happened to be an absolute massive performer and the whole system was ruined for it. A similar type of thing can happen for a trader. If you're not following every single trade, you're not committed to every single trade, you're not going to get the same results. And it takes a few to be out of sync, and it can affect the results drastically. Just think if you do 10 trades and you didn't take, say, 3 of them, you wouldn't think it affected that much. But let's say those 3 were the winners, and you had losers and a few winners in the rest of it. Over the 10, nice win, now all of a sudden you're losing for the week. So it doesn't take much to adjust that. So that's one thing. The other thing, guys, is that if you're talking about an individual trade, you may not stick to the stop and limit that's provided. If there is one, maybe there isn't one. Maybe some guy thinks this is a great buy, he sits with the trade, it comes down, you don't like it, you close the position, he happens to have conviction with it, sits there, chugs up, ultimately flies, makes some profit. Another trader, you're following her. She decides to come out of a position here because she doesn't like it quite quickly. You decide, well, I'll just leave it a little bit and see what happens to it. And you start to overrule and override the system. So that's one thing, guys, is one, not following the system exactly, not following the calls, not following the strategy. And if you're not following everything and doing everything identical, as we point out, it takes a few little tweaks different to sometimes upset the results massively. So there's that part of it. But even if you're following somebody to the letter, following their trades, same entry as them, same exit as them, let's look at this. You've got 2 charts here. Uptrend, now we're pulling back. Uptrend, now we're pulling back. These are both supposed to be identical, guys. I know there's some slight differences here in heights and stuff, but imagine the same kind of thing, right? Pushed up, now we're pulling back. So this is ABC stock, right? Good stock you've been looking at. You're deciding whether you want to risk your capital buying this stock or this market or this currency pair. And you look at it and you do your analysis and you go, right, well, we're pulling back. Yeah, I think it's okay. Let me just see if I might buy if it breaks out here, or I might buy if we break out of the highs. I feel like I'm chasing it. Whatever your analysis is, you do it on the analysis here. Now, let's say we've got this chart, which is an identical chart, but this happens to be the P&L and performance of a trader who you want to follow. This is her performance. This is what she has done over the past month, the past quarter, say. What difference is it in making the decision to allocate risk to this as it is to this? Not much. Yes, you could argue, well, this is our performance, this is the base of the stock price. Well, then I could argue, well, this is the performance of management, it's performance of directors ultimately. Well, then short term, maybe not. And yes, I give you that, that's fine. But ultimately, what I'm getting at here is you are still deciding to risk your capital into something. A stock, currency pair, or another trader. Now, let's say that trader, she does really well and pushes back up to here and you make this money. When do you decide to stop trading the system? Just like a stock. Let's say you buy the stock, it goes up, it's back to highs, great, you're sitting on a profit. Now what do? The decision-making process is still, how do I make sure I keep my profits the best that I can? Do you say, well, that's the trade done, let me look to another trader now and see if I can get onto their system? Or do you think, well, actually, this is probably going to do really, really well, I'm going to stick with it? And it's the same decision-making process for the stock. Let's flip it on its head now. Let's say, for example, you invest in this system, and she carries on drawing down. How long do you stick it out? Let's say you've been in since here. Let's say you bought this stock here. You might say, well, don't want to give back all the gains I've made. At some point, you're still making the decision in the buying of the stock here as you are in investing in the system here. You're investing capital in something, and at some point, you either pull the plug and don't trade with that person anymore. You pull the plug on that stock, and do you rotate into a new idea? Do you rotate into a new person? Can you see where I'm getting? The thought process is very, very similar. And so when it comes down to this question, the answer is no. You still need to learn to trade, because even in the beginning part of the video, we talked about some of the slight discrepancies in the results that can occur if you're not following the system or the trades correctly, or if you decide to do things differently, you will miss a couple. And then we moved on to, even if you do that, how will you know what difference is it in making a decision based on this as it is based on somebody's P&L? They could be a great trader just having a bad couple of months. And if you invested here and you're here, you might be drawing down 10%. Are you happy with that? Are you prepared to sit through that? You might not be. And so you've got to still make the decision yourself, I feel. I think you've still got to have conviction. And this is the difference, guys, I think, is that you may have conviction in an idea or conviction in a person, which is fine. But when you're learning to trade yourself, you've done your research, you've done your setups, you've got your library of setups and strategy, etc. You have a little bit more conviction to take a trade and stick it out and hold it, perhaps. You're not going to be so nervous just looking at the numbers on drawdown here. You're going to be like, oh, well, you know, this is a good idea. Over time, it's going to work out, etc. Now, sure, you might have the same conviction in that person, but I bet you don't. You don't have the same conviction in a person actively trading your money for you as you do your own money and your own setups and ideas and strategies. So listen, there's not to say this doesn't play a part. You know, following a trader, copying a trader, getting signals can be a good learning experience. And I've kind of covered this, so I'm not going to go over it again and again, where okay, you can use them to learn from, as well as maybe make a bit of cash on the side as well. There's an opportunity there if you get the right person and all the kind of stuff that goes with it. But to do it long term, I think is challenging because of the things I noted earlier and that. Now, if you want to put your money in a hedge fund, that's a little bit different, because yes, you tend to have a longer term view. We're talking about more shorter term signals, so shorter term trades. By the nature of it, we tend to be more focused on the P&L every week, every month, every quarter, etc., as opposed to a longer term view with a fund, which again, probably not trading on margin, generally less risk compared to trading, obviously depending on the fund you're going with, and the growth is, you're not going to see these massive, huge, well, you will do from time to time, but you're unlikely to see these huge things that means you pull out your money and this and that and the other. So I don't need to learn to trade. I can just copy or follow a profitable trader. I don't think there's got any legs in that, guys. I personally don't feel you can do that long term. Maybe for a short period of time, but ultimately, if you want to learn to trade and you want to have that kind of skill set that you can improve on and build on for the rest of your career, then learning it and putting the legwork in is really the only way to go, should I say. All right, guys, take care and keep your risk managed, whatever you're up to. Bye-bye.